please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
4% lower. Well, there goes the bell, and okay, I think it's starting almost where the pre-market ended, okay, that's about a 0.3% down on the Sensex and the Nifty, sub 10,400, that's important, and Sensex sub 33,900, so a distance away from the 34,000 mark. What's doing well? I mean, let's look for the green. Not much actually. All Wipro, Ambuja is getting, but they're all mild green, just 0.7, 0.8. So let me straight away look at TCS. That is down 4%. And next to it come Hindalco, NTPC, Aisha, ONGC, Ultratech Cement, Vedanta. So it's an across-the-board lightening of positions that we are seeing. And the top 4 names I mentioned are down over 1%. TCS continues to remain down 4%. But the Bank Nifty is a mild outperformer with minus 0.16. And that could be courtesy what, HDFC Bank is in the green. IndusInd is mildly in the green, and Kotak Mahindra is flat. So it's underperforming. Okay, now it's coming back, the Bank Nifty, coming into flat terrain. So it's a mild outperformer.
Okay, well, for the mid-cap index, it's just about a flat opening with a negative bias, actually. The market breadth is in favor of the declines marginally, so keep that in mind. The space that's getting hit the hardest this morning, once again, is the PSU banking space. So your entire lot, UCO Bank, IDBI Bank, Andhra Bank, PNB, that whole lot is down anywhere between 1 to 5% I think there's a big gash on UCO Bank. Let's just get that chart up for you. Yesterday, it was under pressure. We've been talking about how that stock has been at a 11-year low. Once again, a 2% cut that you're seeing there. Sugar stocks once again getting hit very hard. So Balrampur Chini down 2.5%, Dhampur Sugar down about 3% or so. Aviation stocks, Interglobe Aviation is the one that's getting hit, so down about 2.5% on the news flow that we just spoke about. A few stocks that are bucking the trend this morning, Future Consumers and Ashok Leyland. So those are 2 stocks that are holding up in the green. The market, by the way, is attempting to recover. So the Bank Nifty has now moved into the green, and so is the rest of the market. So there is a recovery there. I'll get to Anuj in a bit. Just one more stock to look at, Biocon. That's reacting negatively to the news flow. So Biocon is down about 1%. But otherwise, Anuj, not bad. It's TCS, of course, that's dragging, but stripped of that, the market is in the green.
Oh, yes, and on TCS as well, the block has happened at around 2,900, which is on the higher end of the discount. So, I won't be surprised. Of course, the initial take is that the promoter is selling, but the promoter has so much stake in TCS and is selling to, for some group activities. So I won't be surprised if TCS is the one which actually leads the market higher from here on as well. But for now, you would want to see the first R low on TCS. That would be interesting to track. The block has happened somewhere around 2,900 on TCS, but the market is quite fine. And as we discussed, perhaps just consolidating yesterday's gains, or just absorbing
just
some of
Rahul
that.
Draviding.
Exactly, just Rahul Draviding. Let's see how things move from here. Ashwini, thoughts on the market, and is there a trade here?
See, we've taken short positions on Bank Nifty because the rally, a lot of it happened probably yesterday. Let's see how well we negotiate this 24, 750, 800. But overall, we could be soft in case there is no follow through beyond that point. Similarly, on the Nifty, 10,000, 450, 460 could provide some amount of resistance. So today is expected to be a sideways day, and you have to play like a sideways day unless the market shows you something different.
Okay. Any specific stock that you would play, Ashwini, now after the market's opened?
Well, TCS should be bought because it's a, a technical issue that is played out. So people who want to take delivery, etc., it's a good time to do that. Also, things like, the metal stocks are still lower. So
yes,
out there you could take some short positions. Balrampur Chini is again kind of falling. So around these levels, try to look more for short positions or buying things which have dipped instead of trying to chase yesterday's rally.
Okay, of course, Balrampur Chini is in F&O bands, so you have to do it in cash market. By the way, just want to point out, just pull out the intraday chart of Bank of India. That stock is now making highs of the morning.
Bank of India, Dena, IOB, some of the weaker banks are doing
yes, but no, on Bank of India, there's a 7,000 crore NPA recovery. That's what the bank is reporting. 7,000 crore NPA recovery is there, which is about 10%. 10% of its gross NPA and about 20% of its net NPA. This they had lent against standby letter of credit, and which they have now recovered. They would recover another 2,000 crore mostly by March end. That's what the Hindu is reporting, and they're quoting the bank's executive director, I think, and Mr. Damodaran, I think they're quoting. We should try to get the management of Bank of India, but that's a big move happening on that stock right now, because there's a 7,000 crore NPA recovery which is there for Bank of India.
Okay, well, that's a stock to look at, definitely. Look at that now, up almost 5% or so. The other stock that's really picking up right now is Future Consumers. We should just get that stock up for you. A 6% rally on Future Consumers and huge volumes on that stock. In fact, some brokerages, Motilal Oswal has initiated a coverage on Future Consumers, so looking pretty good over there. Prakash, any thoughts on any of these names?
Yeah, so the only retail stock that I still believe has a lot of value is Trent out of this entire pack. I mean, D-Mart's getting into that pricey zone. Future Consumer will give you a little bit of sleeplessness at times, but Trent is the one that is getting its fundamental restructuring in place. And I don't know if you've covered that, but recently they bought late last year, they bought something called Zodius, which is an apparel, high-end footwear apparel brand, and also home products. Now that they bought from the JV, which is now available in the stores, West Side stores. So pretty positive on that. You could probably look at that rather than some of these other names.
Okay. Well, Sudarshan, anything on your radar?
Yeah, the markets have opened very well. Traders should use this strength to close their long positions and take profits home. There are a lot of individual stocks for buying. The first is TCS. I think everyone is now going to talk about it. TCS is a buy at these current levels. Don't miss out. Then we have L&T and ACC, both from that larger infrastructure space that should do well today. Be on the buy side.
Okay. This is very big. Bank of India recovering 7,000 crores. Okay. Mitesh, anything on your radar now?
Yeah, quite a few stocks, Lata. We've spoken about Cholafin and Kotak in the morning, but that apart, I think Wipro is open with a good gap up and showing follow through. So I think that could be a buy with a stop at 292. Look for 38, 310 kind of a target. And apart from that, I think Exide is looking very interesting. I think it's just about to get past its key pivot of 216. Once that breakout happens, I think I would consider buying that as well, keeping the stop at about 212.5 and look for targets of around 225, 230 on the upside.
Okay, gentlemen, thanks a lot for stopping by and speaking to us and taking us through the market opening. For now, it's a flat opening. It's just consolidating the gains that we saw yesterday. Let's invite our market master for the moment, Pradeep Shah. He is the chairman and founder of Indasia Fund Advisors. Pradeep, hi, good morning and thanks for speaking with us. How are you navigating this market now? It's been a very volatile start to the year. We've underperformed a lot of emerging markets as well. Do you get a sense that the rest of the year could be tricky?
I think so. I think we have, on the good side, we have global economies doing well, US, Europe, Japan. The tension with Korea has eased considerably. The trade war fears have come down with Trump making strong statements first and then implementing them in a softer way. So all that augurs well. The Indian demand situation is holding up very well. We saw it emerge from the GST problems in December, and it's continuing to do well, both consumer durables, consumer consumables, even some industrials and cement and so on and so forth. So I think the outlook has been good so far, but looking ahead, one and most important, I think, for me is the politics. While the BJP won the Northeast, as some analysts have pointed out, it may be because of anti-incumbency. Their development message has certainly reached out there, but in other states such as Rajasthan, the anti-incumbency may work against them. So also in Madhya Pradesh and Chhattisgarh. Now, going forward, looking beyond that, you have the elections next year. If there is some anti-incumbency reflected in the elections and Mr. Modi gets a lower vote share or lower seat numbers, will he be able to do the same things with the dynamism that he has shown so far? So that becomes a big challenge, I think. And I think that will weigh on the markets. Earnings will catch up. I think prices will remain relatively flat. I don't think there's going to be a re-rating upwards because there's no really trigger. And in fact, till March, there is a trigger for selling because of the long-term capital gains tax and the dividend tax introduced on mutual funds. There is a pressure for sales.
Okay, Mr. Shah, we'll just request you to wait a bit because there is important news that's come on Bank of India, which Anuj just referred to, saying that they have already recovered 7,000 crore rupees because of some standby letters of credit which they have been able to, get the borrower to pay back. We've been joined by the Bank of India management, have we? Okay. Okay, Mr. Mahopatra, the Managing Director, has joined us, Dinabandhu Mahopatra. Good morning, sir. Can you confirm this news for us? Is this have you all managed to recover 7,000 crore rupees this year from Jan onwards?
Yes. In the meantime, we have recovered around 7,000 crores.
Okay.
So that will be reflected in this quarter's performance.
Okay. And you may do more?
Yes, some other also expected to be recovered.
So in the next couple of months, how much do you think you can recover? Another 2,000-3,000 crores?
I hope so.
Okay. And what will this do to your net NPAs, currently standing at somewhere around 6.5 to 6.7%?
It will definitely improve dramatically, Lata. We are trying our level best. Okay. Other recovery also we are targeting. Okay. If you remember, last interactions after my December result, I assured everybody that we have exposure against banks and we are going to recover these monies shortly. So in the meantime, we have been successful to a great extent. Okay. And I hope we'll be recovering the rest also within time.
Well, since we have you with us, Mr. Mahopatra, there was a report which said that you have about 6% of your assets in those various SDR, S4A kind of RBI schemes. Now, all those will have to be either resolved or taken to NCLT in 2 quarters. So, how much do you think your NPAs can go up because of that from the current 16%?
Yeah, that, Lata, it will be industry-wise impact. Because of the recent guideline of RBI, we are all working the numbers. Okay. And for Bank of India, of course, there will be some increase in NPA because of that guideline. But good news is that you may be knowing that Bank of India already covered around 65% of its NPA. Okay. And some of the bigger accounts which are on the last stage of bidding stage, getting 80%, 70%, interest from the bidders. Okay. In those accounts, some of the big accounts we have already covered 100%. Oh, right. So we are expecting right back also on those accounts. That will help us to manage all these new development.
Okay, just coming back to the NPA target then, say over the next 6 months, what would the net NPAs look like for the bank?
Or gross at least.
Q1, Q2 will be very good, but this Q4 we are still calculating on the numbers, because of this we are discussing with different promoters and persuading them to recover whatever overdue amount. So that will depend on the entire process. But Q1, you see all these big accounts, NCLT accounts are expected to be resolved in Q1. Okay. And we are expecting a huge write back on that account. That will be very good for Bank of India. Q2 also will be still better. So not only Bank of India, banking industry, next year you will see all the banks will be doing better. Okay. This is all happening, whatever happening for the good for the banking industry. Okay. And all those toxic assets will be cleaned and it will be taken
So I just want one number. You have already recovered 7,000 crore. You expect another 2,000 to 3,000 crore. Is that right?
Around 7,000 crore. Around 7,000.
7,000 crore you have recovered. In addition, you will be able to do another 2,000 to 3,000.
Yeah, we are trying. We are very hopeful, and some of the issues are there, but we are trying, and we are very hopeful also. Fair
enough. Thank you very much, Mr. Mahopatra, for joining in. This is very good news, and the stock market has reacted very positively because that will take care of a lot of the provisioning, this recovery. Mr. Shah, to come to you on that. The public sector banks will go through pain this quarter and next. But looks like this is an AQR2, which the Reserve Bank is doing. About 4-5% of the remaining stressed assets, which are still standard, are going to be recognized and provided. Do you think this is the right time to buy them at all?
I think it requires some boldness or some better information than that. I think there is still pain to come. Of course, prices have come down of these public sector banks, and individual banks may be able to resolve their problems better. But I just think that they need all will need capital, so existing shareholders will get diluted. From all technical as well as from a practical point of view, it would be a little adventurous to buy into stocks at this time without knowing how well a bank is doing.
Okay, so it's adventurous to buy into the banking names, but I'm sure it's not that adventurous to buy into IT, right? I mean, that's been the big comeback this year. Is that a space that still has a lot more value now, the large cap IT names?
Well, we talked about this earlier, that we expected the IT sector to do well, and that's because they've been changing their business model over time. They are no longer the companies that they were 5 years ago, where they were really providing human resources to solve problems over there. Now they are providing human resources with intellectual property and complete domain-based solutions for their clients, and therefore they're getting better value for their stock, and therefore their need is very much felt by Western markets. And whether it's United States or Europe, they will all see that there is something that India has to offer in this area, and the good IT companies will benefit from that. And you see that TCS and so on, people were recommending it for that reason. I would guess that they are changing so much towards providing solutions to their clients.
Mr. Shah, I take your point that politics will provide a bit of hesitation with, every 3-4 months, one state election coming after another in the build-up to the general election. But we are also seeing very positive growth numbers. I mean, the IIP numbers apart, we had the auto sales numbers and the PMI numbers, all of which are indicating that some sectors are ticking positively. Therefore, I mean, will you still be a buyer even if the overall indexes didn't do much?
You know, the markets ran up last year, a year and a half, in anticipation of this. Unfortunately, demonetization and the GST set us back, and therefore profit growth didn't come about. But now profit growth will be reflected, but markets will not move upwards on that count, because then they will expect future profit growth to continue. That depends on monsoons, again on elections and all that. The uncertainty of the elections will play a big role in determining where the P multiples stop at.
So you're a big finance guy.
I think they'll stop at this time more towards the current levels.
Okay, no, I mean, you're a master of NBFCs and banks for sure. So so I wanted to know whether you still like the NBFC space, because there is an abdication of growth by the PSU bank sector. So even if yields rise, and today, of course, they actually fallen a bit, are you attracted to that space, NBFCs?
See, NBFCs are benefiting from the hesitation that public sector banks have to increase their loan book, given that they have capital adequacy issues. So clearly the other private sector banks and the NBFCs are taking up some of the market share of the public sector banks. And that, I think, will continue going forward. But NBFCs are multiple intermediaries. They borrow from other primary lenders, such as banks. And so their cost structure is worse than, for instance, the cost structure of private sector banks. Okay. And I think, therefore, in that scheme of things, the private sector banks are better off.
Okay, by the way, the market is surging now on the bank Nifty, and really it's about the PSU banks now, and a lot of stocks now making highs of the day. Bank of India, of course, is leading that move, but take a look at some of the other stocks. Union Bank, PNB, Indian Bank, of course, one of the stronger banks, so that's also fallen a lot over the last few days. So obviously there's quite a bit of buying which is happening right now in some of the PSU banks. So that clearly is the space to back in today's trade. Also the Bank Nifty right now making highs of the morning. So that move is continuing on the banks.
Fair point. Mr. Shah, it was a pleasure speaking with you, sir. Thank you very much for joining us and giving us that overall macro picture, even if it isn't very optimistic at the moment. For the moment, of course, it's the Nifty Bank, which is all guns blazing, and mind you, on the strength of some of the public sector banks, this rally has taken off, as it were. Well, we have to take a break now, but we're going to pursue this banking story. There seems to be some light at the end of the tunnel, and we will get more big PSU bankers to speak about the state of the sector.